We are jumping straight into MP Materials today. Everyone is watching the recent price action, like the 6.7% rise we saw recently. But that's not the real story.
Not at all.
The real story here is the massive strategic pivot. I mean, it's all centered on their unique position in the U.S. domestic supply chain and, maybe more importantly, this guaranteed revenue floor they've got from the government.
Exactly. You're tuned in to the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
If you're enjoying the show, make sure to subscribe and hit the like button. It really helps the channel.
For sure.
And definitely let us know in the comments which stock you want us to simplify next.
All right, so let's get into it. Let's look at the bull and bear case for MP Materials right now.
Okay, let's unpack this. The bull case seems to be built on two things: a ton of operational momentum and this deep strategic protection.
Right. And let's start with production. The Q3 2025 numbers were incredibly strong. They hit 721 metric tons of what's called NdPr.
Neodymium and praseodymium.
Exactly. And to give some context, that's a massive 51% increase year over year.
Wow.
That's not just a little bit of growth. That shows they are really successfully ramping things up at their Mountain Pass facility.
And what's interesting is how that strength is flowing right down to their financial health. The revenue for that quarter was, what, $53.55 million?
Yeah, it handily beat consensus estimates.
Yeah.
But the real story isn't even the top line. It's the balance sheet.
That's the key technical point. I mean, in a sector like mining, which is so capital intensive, companies usually struggle with liquidity. They're just always sinking cash into a hole in the ground.
But MP Materials is the complete opposite. Their liquidity is, well, it's extraordinarily strong. They reported a current ratio of 8.05 and a quick ratio of 7.51.
Wait, let's just pause on that number for a
Yeah.
second. A quick ratio of 7.51 is staggering.
It is.
You're saying they have $7.50 of cash or stuff they can turn into cash immediately
Yeah.
for every single dollar of short-term debt?
That's right.
In a sector where, like, 1.5 is considered healthy, this tells you they are just sitting on a massive cushion of cash.
Honestly, it's an embarrassment of riches. And that cushion is essential because, as we'll get into, they're moving into these big, risky construction projects. And that kind of liquidity lets them fund everything without constantly running back to the markets for more money.
So record production, incredible financial stability. Now let's talk about profitability. This is the inflection point everyone's watching. They are still technically operating at a loss.
Right, a loss of 10 cents per share for Q3 2025. But that actually beat expectations. The market was braced for a bigger loss.
So the market is clearly looking past where they are right now.
Precisely. The whole story driving the stock price is the projected return to actual profit. And analysts are calling for that to happen, well, immediately, in Q4 2025.
But the really dramatic shift is what's projected for the full fiscal year 2026.
And this is the number everyone's got their eyes on. Fiscal 2026 EPS is projected to flip from a full-year loss of 21 cents in 2025 to a gain of positive 68 cents.
That's almost a $1 swing in earnings per share. That's a massive turnaround.
And it's a turnaround driven less by the market price of rare earths and more by strategy.
Which brings us back to that huge strategic moat, the government backstop. MP Materials runs the Mountain Pass facility, which, as we know, is the only commercially viable rare earth operation in the entire United States.
And that domestic leadership is the core of the whole investment thesis. It's critical for U.S. national security, for reducing reliance on foreign supply chains, mainly China.
And what's fascinating is how that necessity translates directly into financial security for the company.
And this is where we have to talk about the Department of Defense Price Protection Agreement.
This isn't just some handshake deal. This is a hard contract that fundamentally changes their business.
It really does. The DoD deal gives them a guaranteed revenue floor of $110 per kilogram for a set amount of their NdPr production.
So why does $110 a kilo matter so much?
Well, because it mitigates almost all of their margin risk. If you look at that number, $110 per kilogram is roughly 15, maybe 20% above the 5-year average trading price for NdPr.
So it's basically a subsidized floor price.
Exactly. It guarantees them positive operating margins no matter what the volatile global rare earth market is doing. It's the U.S. government saying, we need you to exist, and we will underwrite your profitability to make sure you do.
You're basically investing in a company that has political leverage over its own downside risk.
And don't forget the massive capital injection. The DoD also committed $400 million in 2025 just to bolster their balance sheet for these expansion projects.
And that money is crucial. And when you combine that strategic backing with their commercial deals, like the one with Apple for magnets, it allows for a level of vertical integration that, well, that foreign rivals just can't replicate here in the U.S.
Right. And then you have the market sentiment. Geopolitical tailwinds are definitely helping. I mean, the ongoing U.S.-China tensions constantly remind everyone why MP Materials is so important.
Technically, the chart looks pretty interesting too after that recent pullback. The 50-day moving average, which is around $57.70, is getting close to the 200-day, which is up at $61.21.
The Golden Cross setup.
Exactly. And for anyone listening, that's just a bit of shorthand for the idea that the recent strength in the stock is getting strong enough to overcome the longer-term selling pressure. It suggests a new uptrend could be starting.
And you see that trust in the volume.
Yeah.
That day the stock jumped 6.7%. We saw almost 7 million shares trade hands. That's heavy institutional interest.
So you've got a government guarantee, massive liquidity, record production, and a strong technical setup. That's the perfect bull case.
It's a great pitch.
But every strategic advantage comes with a price tag, and the question is whether the market has already overpaid for that security. Let's pivot to the red flag.
Okay, the primary concern is valuation. It's squarely on valuation. Despite that huge moat, the market is pricing MP Materials at a very, very aggressive premium.
A truly enormous premium. The price-to-sales ratio is sitting at 22.93.
Right, and that just dwarfs the industry average, which is around 1.44.
So that disparity tells you everything. You're not buying the company based on what it's earning today.
Or what it's losing today, since 2025 is still projected as a loss.
Right. You're buying a projection of what they might earn in 2028. That multiple means the market has priced in flawless, spectacular execution for years to come, and that's where the bear case really starts.
And when you're buying execution, you have to trust the people in charge. Which brings us to a pretty significant red flag: insider selling.
Over the past 90 days, we've seen about 691,000 shares sold by insiders, valued at roughly $43.5 million. And this includes sales by the CEO and the CFO.
Wait, $43.5 million in sales, including the top 2 executives?
Yep.
So if 2026 is going to be this massive profitability inflection point, why are the top brass cashing out now?
That's the question you, as an investor, have to ask. It could be part of a structured plan, of course, but it could also signal that their internal view doesn't quite match the public market's wild optimism. It raises a serious question.
And adding to that risk is the complexity of the projects themselves. The execution risk is huge because they aren't just digging rocks out of the ground anymore. They're building complex downstream chemical facilities.
And these are not simple construction jobs. We're talking about the 10X facility and a new heavy rare earth separation plant. The real challenge isn't mining. It's the sophisticated chemistry and metallurgy that China has dominated for decades.
Any delay permitting, construction, whatever, could directly hit those 2026 profit projections that the entire valuation is depending on. If they push that profitability date back by even 1 quarter, the market will react, and it will not be pretty.
That uncertainty is probably why we've seen some downward revisions to earnings estimates over the last couple of months.
Now, to be fair, the stock is down almost 17% over the past 90 days. So you could argue that a lot of this risk has been priced in already.
True. The strategic deals, the DoD floor, the Apple partnership, those are seen as powerful offsets to these operational risks.
So we have the bullish fundamentals against the bearish valuation and execution risk. What does this all mean for the immediate future? Let's look at the catalysts to watch.
The new-term focus is all about the calendar.
The next major catalyst is the Q4 2025 earnings report. That's expected in early February 2026. And the market will be watching that report with a microscope, looking for confirmation that they actually hit that profit turnaround we talked about.
That quarter has to show the inflection. If they miss, or if their guidance for 2026 is even a little bit cautious, we could see a very swift reversal of this recent momentum.
And then, beyond earnings, it's all about operational milestones in 2026. We need updates on the 10X facility. Is it on budget? Is it on time?
The same goes for the heavy rare earth plant. Both are absolutely crucial for their strategy, and commissioning is expected later in 2026. Any news, good or bad, on that front will move the stock.
And just to give you a sense of the potential upside if they pull it off, the consensus median price target is sitting around $79, but the range goes all the way up to $85.
Which suggests analysts see significant room for higher highs, but only if they deliver on those 2026 production ramps and that DoD agreement kicks in like it's supposed to. The stock price is completely tied to project management for the next 18 months.
It really is a high-stakes play. It's a pure investment in securing critical materials for the future. The question for you, the investor, is whether you believe the team can deliver on those complex projects to justify the premium you're paying today.
That's the lowdown on MP Materials for today. The core story here is this tension between the strategic necessity, this government support for the only U.S. rare earth mine, versus the current high valuation and the very real execution risks in their new facilities.
At the end of the day, it's a high-stakes play on securing critical materials for the future.
If you haven't already, subscribe so you don't miss our next breakdown. We'll catch you on the next one.